Welcome to Vision Capital's first quarter 2025 investment outlook. I'm Jeff Schmidt, co-director of investments. During the first 3 months, financial markets expressed speculation of slowing U.S. economic activity, leading to falling interest rates and falling stock prices. This time, however, the most valuable companies fared the worst, with the Magnificent Seven falling 16% during the quarter. International stocks increased by nearly 7% as investors look past ongoing recessions in Europe. Global stocks fell sharply since due to aggressive U.S. trade policy announced on April 2nd. Again, the Magnificent Seven were among the worst performers, down another 14% on key questions about excess AI capacity. Overwhelming demand for AI infrastructure drove these stocks to incredible returns in 2023 and 2024. But reports of canceled data center capacity, falling compute rental prices, and adequate and cheaper training and inference chips have people rethinking the value of this new industry. The 90-day tariff pause on nations excluding China, announced on April 9th, reversed some of the losses experienced since April 2nd. The economy has known tariffs were coming since November 5th, 2024. A targeted and precise policy against certain countries, goods, services, and industries would help improve economic conditions for many Americans by equalizing economies of scale and broadening end markets. Instead, a broad and unspecified policy was announced, resulting in total trade-weighted duties about 10% more than expected. Southeast Asia, home to much of U.S. goods manufacturing, was particularly hard hit. Because these nations import very little product from the U.S., we suspect negotiations with U.S. companies will yield commitments for expanded U.S. manufacturing footprint in the future in exchange for tariff exemptions. Negotiations with developed nations, such as Europe and Japan, will reduce levies to a lower equivalent level and eliminate other barriers to entry. Conversations with China will be slow and difficult, with a primary focus on national security. With a large consumer base, China could limit the sale of U.S. products to its citizens. Economic data through March has been strong. This chart shows real consumer spending growing at rates far above the decade between the Great Financial Crisis and the pandemic. Steady progress in trade talks over the next month would give businesses globally a decision pathway forward. Little or no progress would cause paralysis and slow the movement of capital and goods, leading to a global recession. The 90-day reprieve will unlock any stoppage already in place over the last couple of weeks. We suspect steady progress with large trade partners and companies will result in a growing economy in the second half of 2025, following a noisy second quarter. We note, however, that time is of the essence, and that the delay between weakening employment data and immediate concern of a tariff inflation supply shock will keep the central bank from taking preemptive measures. Stocks had repriced to this likelihood, with the average U.S. stock down nearly 27% from closing highs. Vision Capital strategies were prepared for a drawdown going into 2025, with risk at the low end of specified range. We've increased risk in portfolios in recent weeks as long-term return prospects improved. Thank you for listening, and we look forward to speaking with you again in July.